Hello everyone, welcome to our channel. This video is for students who are studying CA Final Self-Paced Online Modules Set-B, Strategic Cost and Performance Management. In that subject, we are going to see Chapter 6, Strategic Revenue Management. In this chapter, Illustration 1 has already been covered and uploaded in our channel. Now we are going to see about Illustration 2. Let us get into the sum. So, the company name is Catalyst Limited. They are making a single product and the details are given below. The selling price is 10 rupees. The direct costs are rupees 5 per unit. This is the variable cost required to make the product. Present number of setups per production period. Before each production run, setup is done. Now what is a production run? For example, if you want to produce 1 lakh units, you can't do all the units simultaneously. You have to do batch by batch. For example, if the capacity of the machine is 20,000 units, you have to do the production 5 times in order to produce 1 lakh units in total. So, here the number of production runs is the number of batches produced. Like that, for every production run, 1 batch will be produced. In our example, for every production run, 20,000 units will be produced. So, in order to produce 1 lakh units in total, you have to make 5 production runs. Like that, in this example, in this question, they have given the number of setups per production period. Before every production run, in this sum, they will do a setup. So, before every production run, the setup will be done. So, the number of production run is 5. The setup will be 5 setups. Like this, the number of production runs will be equal to the number of setups. So, there will be 42 setups is given in the question. The next information is cost per setup. For doing one setup, the cost will be 450 rupees. In one production run, how many units will be produced? 960 units will be produced. During the production period, there is something known as engineering hours. In this sum, there are 500 engineering hours. The cost per engineering hour is rupees 10. Now, this is the current situation. And here they have given some changes which are going to be implemented. In the cost per setup, 450 will be reduced by 90 rupees. And then the production units per run. Currently, 960 units are produced in every production run. In the proposed change, 1008 units will be produced in every production run. The engineering hours are also reduced to 422. Let us read the additional information. The company has begun activity-based costing of fixed cost and has presently identified 2 cost drivers, production runs and engineering hours. Of the total fixed cost presently at 96,000, after the above, 72,100 remains to be analyzed. There are changes as proposed above for the next production period with the same volume of output. Now let us understand the question in a deeper manner. So, here the number of setups is equal to the number of production runs. Total units produced in the current situation. Here we have total 42 setups or 42 production runs, and in each run we are producing 960 units. So the total number of units produced are 42 runs multiplied by 960 units. Total this much units are produced. And in the total fixed cost, total of 96,000 fixed costs are there. And in this 72,100 is unanalyzed, still not broken down. But this 23,900 rupees is analyzed and found out what are the factors behind this 23,900 rupees. They have found out that there are 2 types of things, setup cost and engineering hours cost. This setup cost they have calculated 42 setups is currently done, and for one setup 450 rupees is charged. So total setup cost is 18,900 rupees. For engineering hours, there are total 500 hours in the current production period and rupees 10 per hour is the cost. Total engineering hours cost is 5,000. This 23,900 is broken down into these 2 parts. Now let us see about the proposed situation. In the proposed situation, the things that are going to change are cost per setup, production units per run and engineering hours. There is no change in the total number of units which are produced. Currently, 40,320 units are produced and there is no change in the proposed situation. So, in the proposed situation, 40,320 units will be produced and units per run is changing. Earlier, we had 960 units per production run. Now, in the proposed situation, there will be 1008 units per production run. The engineering hours is also reduced to 422 units. So if you are going to produce total 40,320 units and in one run you can produce 1008 units, totally how much setup or how much run you will need? This is the calculation here. Totally in the proposed situation, 40 setups or 40 production runs are required. For per setup, the cost is reduced to 360. So the number of setups is 40 and the total setup cost in the proposed situation is 14,400. Since the engineering hours, this is the current situation and proposed situation. Now let us see what is being asked in the requirement section of the question. The requirement is we have to compute the units and production runs for break even in the changed scenario. After doing the proposed changes, we have to find the units and production runs for break even. Now we have to compute the break even point. The break even point formula is fixed cost divided by contribution per unit. In the total fixed cost, while calculating it, we have to include both analyzed and unanalyzed part. This is the total fixed cost. In this much is the unanalyzed part, this much is the analyzed part. When calculating the total fixed cost, we have to include both unanalyzed and analyzed part. So here they are asking it in the changed scenario. Even in the changed scenario, proposed scenario, the unanalyzed part remains the same. The analyzed part, the setup cost is reduced to 360 and the number of setups we have calculated is 40 and the engineering hours has been reduced to 422 and the engineering hours cost remains the same, 10 rupees. And here the price minus variable cost. For contribution, the formula is selling price minus variable cost. This results in contribution. So this is the thing they have found out in the denominator. By dividing this and computing this, you will get 18,144 units. And the 18,144 units is the break-even point in terms of units. For producing this much units, how much production runs are required? This is computed here. Total break-even units divided by in one unit we are producing in one production run we are producing 1008 units. So totally 18 runs will be required in order to produce break-even point units. This is the requirement in the first part of the question. And here the second part is a theory part and they are asking us that the company should try to break up the remaining fixed cost or they should not analyze the remaining part. Here what we have to see is by analyzing the part they have found out that there are two activities. And by finding out the two activities, they have reduced the number of setups, the cost per setup, the number of hours. By doing this, they have got cost savings. So, if you analyze even more, you can get even more cost savings. So, you have to analyze the unanalyzed part of the fixed cost. This is the conclusion which is given here as in a paragraph format. You can read this if you want this. Thank you.